Okay, guys, here we go. Again, my name is Pat Barham. I'm with TradeTheSystem.com, and I've been moderating our trading rooms for a number of years. And guys, what we're doing today, I'm going to teach you something in here that I call a holiday trade. And just to give you a little bit, and I'm sure y'all probably, if you've been in here throughout the day, you've heard a lot of people in here doing the same thing. The warning about what we're doing, basically it's this: don't trade with money you cannot afford to lose. And that's the big key on all of this. Make sure that if you're trading, make sure that what you're doing is you're doing it in a controlled environment. Make sure you know what you're doing before you start trading, and use stops in the market. If I did nothing else today, just if I could convince you that you need to be using stops in the market, and you accept that, that's well worth the time that you're spending in here. A little bit about myself. Guys, I've been trading commodity futures for 35 years. That goes back a long way. I love what I'm doing. People ask me, well, when are you going to retire? I'm not going to retire. I'm still too young to retire to start with. Number two, retirement is, I'd dry up and blow away. So if a little bit, I am not the one on the left. I am the one on the right in this picture. And I've been trading commodity futures, like I said, for 35 years. I started in this business as an institutional grain trader. I've got a family that is growing by the day almost. I've got 2 daughters and a son, and my kids are grown. Are growing, I should say, and my family, we've been doing a lot of this, and one thing that commodity trading has allowed me to do is to come in and make some moves that most people don't have the opportunity to do. We've traveled all over the world. We've traveled when the kids were smaller, and I tell people a lot of times I've done my retirement, if you want to call it that, while the kids were young. You know, a lot of people want to retire where they can travel. I've been traveling for years, and commodity trading in the futures market has allowed me to do it. Along with that, I've had plenty of opportunity to spend time with my kids. Like I said, I got 2 girls and a boy. One of them is, I got 1 grandchild and 1 on the way, and I also have a son who plays professional basketball. I don't know if any of you guys ever heard of Gonzaga University? The Bulldogs up in Spokane, Washington. Anybody heard of them? Yeah. So what we're looking at, just had somebody come in. My son played basketball at Gonzaga when they were #1 in the country, and he's now playing professional basketball overseas. Played in the Czech Republic last year, played in China the year before, or Japan the year before, not China, Japan. And all of this, guys, leads me. There is so many distractions going on in here, guys, right now. I apologize. My wife is coming in, doing all this stuff. There's a chainsaw outside, but I'll get through it. Now, what we're going to do, holiday trade. I'm going to go through this awfully quick and show you what we're doing. And I'm going to throw something up here to start with, and let me do this. It's a trade that I'm in right now, guys, because we'll be going into the close fairly soon. But let me throw this up here where I am. Give you an idea right now. Let's see if this shows up. Let me see the audience view. Okay, you see it. This is a trade that I've been short in the August soybeans from 1165. Now this is my move today in here. This is live. You can see, you'll see it as it moves. 28.12.50. That's what I'm up today off of it. And why am I showing you this now? Off of this, what's going on is I put this on the day before the 4th of July. That was Friday afternoon on the close. Now, how did I come up with this? It's not anything that I've really come up with that is something that most people, if you've spent 35 years in the market, you would know this. Now, what kind of triggered a lot of this is this. There is a legend called the voice from the tomb. It's a grain trade myth. Supposedly, is it a myth or is it real? What this was a grain trader on the Chicago Board of Trade that traded years ago, back in the early 1900s, and he had made his fortune. He had he had several kids, and his wife passed away, and they thought they were going to get a big inheritance. Off of this big inheritance, they knew it was coming, and they thought they would be a little bit lazy. And as the legend goes, when he died, he gave all this money to charity and supposedly left his kids with this one thing, which was the voice of the tomb. And it was the dates that he would trade these markets. And out of trading these markets, they could make their own fortune. Now, off of this, over the years, from the voice of the tomb, a lot of people have still tried to figure this out. Is it still a viable trade setup? What's changed over the years? What's a driving force behind the dates in these trades? Now, this is what we're looking at. Guys, this is, I want to leave, anytime I do a webinar, anytime I do this, I want to give you something that is worth a value. These are the dates if you wanted to trade wheat from the voice of the tomb. Now, if you could write all those down, I'd be more than, happy to send them to you, but you're going to have to send me some emails requesting these dates, and then you've got the corn dates in here. When to buy corn, March 4th, selling corn on the 10th, buying corn on June 25th, and selling corn August the 10th. Now, off of these dates, again, as I go back in here and take a look at it, are these still viable trade setups? Yes, they are. But things have changed. Now, how many out there have seen the movie Trading Places? And what's a trigger for a lot of these trades that I'm going to show you about today? A lot of it is market volatility. And if you watch Trading Places, yeah, people have watched this, Trading Places. It's if you want to watch a movie and hear about trading and the way it was, it just not too awfully long ago, when if you remember this, that they were going to try to corner the two brothers were going to try to corner the OJ market, and they were going to get rid of Dan Aykroyd and just bring in Eddie Murphy, and they said they could trade anybody to do this. And they were waiting for the orange juice report. And what happened? Dan Aykroyd, Eddie Murphy kind of pulled an about face on them. And if you've not watched it, you ought to watch this, guys. It's a great movie. Now, what preempted all of this for them? It was a report. It was a report on the orange juice. Now, what we've got coming up, and I'll show you this in a few minutes, are some reports coming up when you look in the grain markets that you also, if you've not traded the grains ever, you need to start looking at this. You need to, because you're passing up a market that is a fantastic market. Like I showed you, off of this trade right now, I put on 2 contracts, and I was planning on adding to it, and the market dropped so fast I was not able to add to it. Now, I'm up right off of these trades. I'm up close to $9,000 on 2 contracts. Do you know what my risk was? No, you don't. My risk, my initial setup in this, when I went into this trade that I'm up $9,000 on right now, if I closed it out, $100, 8 ticks. I did nothing more than go 8 ticks on this trade. It dropped several points, and I put on a second contract. I'm short one from 1165, and I'm short the other one from 1163.5, and that's what it's working. And again, where is it? Right now, you look at it, it's for today only, it's at 27.62. That's what is it? The November soybeans are down 31 cents. We're down pretty strong in the August also. And the reason I went into August soybeans was where I could trade in and out of the November soybeans as I go along. So, reports. What's important about the reports? The information in the reports. Do you really need to know what's going on with the reports? No. And what effect does the report have in the market? These are the things that you've got. Now, this is what we've got. You can see this is current. Some of the reports that happen, you could go to NASDAQ and look at the economic calendar in here, and you'll get these. What happened? Let's take a look at it today. Do the markets have movement off of reports? Let's take a look. And let me change screens here. Okay, there we go. Here's crude oil. Here's a 1 minute. Let's go with a 5 minute. And you'll see that I'm using Sierra charts. Do reports have an effect on the market? At 10 o'clock Central, 11 o'clock Eastern, crude oil came out with the petroleum status report. Did I care what that report said? No, not at all. But look what happened. 47.79, and right now we're trading at 45.25. Pretty good drop in the market. Now, if you knew this was coming out, you had opportunities to get in the market. Now, what else is coming out that might trigger some opportunities for you as you come along? Well, on August the 12th, we've got a grain report that will be coming out that will move the market. How much is it going to move the market? Let's go to the correct screen here. I'm sorry, guys. My screen's numbers are changing for some reason. Let me see if I can get this. Be patient. I don't know why that happened. There we go. We're back over where we need to be. Okay, off of this, the petroleum status report moved it. Now, we've got coming out like I said, on July the 12th, we've got a crop report that will be coming out. And what happens in the market? Well, what moves the market? That's what we're looking at. Most people go, well, you've got news, you've got reports, you've got political situations that move the market. Perfect example of this was back in the end of June in here when the UK voted, said to United to the European markets, guys, we've had enough with you. We're bailing out and we're going to get out of the European Union. The people voted for this. They got out and they were gone. What happened? The market just tanked. Did we need to know ahead of time what was going to happen? No, it was something political happening, and all of that began to move the market. So what do we do at this point? You trade the markets and the patterns that's set up. You don't have to trade the news. Now, one thing that I use a lot through the charts, and I'll be showing you today, is the power band setups. Some of the trade setups that I use with the indicators that we've got at Trade the System. And off of this, I think it's one of the best indicators that a person could use to make sure that you're entering the market at places where you'll have more of an edge in staying in and an advantage of making money in the market. Now, off of this trade that I put on, that I've got on right now in the short August soybeans, that's where I entered. Now, here's a July contract or July crop report that we've got coming out. This is agricultural products. And why is this important? Because at 12 o'clock Eastern, we will begin to get these reports that will filter in. From 12 o'clock to 12:15, all these will filter in. And it will move the market. And how do I know it'll move the market? It always has. The way the market is set up now, it's not so much as what you know about the report, it's can you trade once the report comes out and people start trading it. Well, the effects of a report, what happens? You can go back in here, and I've got this from 2015 in August last year, the move and the importance of knowing when these reports come out. If you can trade it and make money off of it, you don't have to risk huge sums of money. You can go in there and risk. I don't risk more than 8 ticks on hardly any trade. The only thing that I put in and risk more than 8 ticks, $100 on a per contract basis, is the bond market, and I'll risk 5 ticks off of that. Sometimes 6 ticks, but that's just the nature of the beast with bonds and the way that they move. You've got to risk just a little bit more. Everything else is I'm risking 8 ticks or $100 per contract. And I did on the soybean trade, and a lot of people ask me, well, what's the risk reward? Well, so far it's up about $9,000, and I only risk $100 off of it. And if you look at it, look at where I am right now. Since I've been talking, this has moved $500 on 2 contracts. Now, let me get back to the center. And that's where we are, 67. All right, 65. Now, I'm officially up just a little bit more, almost 10 grand on this contract, these 2 contracts that I've got up. I'm looking for this market to potentially drop down to around $10. And, you know, guys, this is live. This is exactly what I was hoping would happen today, but I did not think that that it would move this quickly. And here we are, up $3,462.50 today on 2 contracts. Did I do anything else? No, I'm just sitting there watching it roll. So, and I risk $100 on that. This is live. That is live. Now, the effects of a report a lot of things can happen. A lot of things around holidays happen. St. Patrick's Day, you'd think, well, nothing happened. There's a commodity in here, futures contract, that's been a winner 31 out of the past 40 years. Average hold has been 23 days. And off of this move, it's got a seasonal tendency where the profit's been about $1,700. In 2015, the move was $1,580, and the signal was given on March the 17th. What's that have to do with it? A lot of different markets that you can be trading move around these reports. I left this one on here. This was July 14th of last year when I started this trade in the corn market, and you can see right here my cost was $436 on this trade. I got filled on August the 10th. I held it less than a month on 2 contracts on September corn with a $5,300 profit. Off of this, the day I got out, it started at 63.25 and I had a $975 reversal, and that eventually stopped me out of the market. But still, on 2 contracts, I had a $5,300 profit. Now, how do you trade these moves? That's what I want to show you guys on how you trade these moves. And here's the actual report from Infinity Futures. You can see Transact Futures. Here's the report off of this. Shorted at 436. I covered at 382.5, and it ended up being gross profit from the trade $5,350. These are actual results. These aren't something. This is the detailed trading report on it. It even gave the gives the times that I went in on July the 14th at 1:32, and I got out on August the 7th at 10:05. Now, that's a pretty decent trade. No, here, the field was August the 10th at 156. Got out at 382.5. Now, these are live trades. These aren't something just trumped up. Now, what's changed in the market since the voice from the tomb? Well, a lot's changed. This is the way people used to farm. This is the way people farm now in the agricultural side of it. If we looked at everything in the futures market in the last 15 years, there's been massive changes. Take a look at the Chicago Board of Trade trading pits, the way it was before 2008 when we did not have electronic trading. After 2008, this is what it began to look at. This was the pit over here. That was the pit. This was a pit afterwards. Now, you want to see what the pits look like live now? There are the live trading pits. This is what the pit looks like now, electronic trading. And what I want to teach you guys is how to read volume, and I think that's one of the most important things that you've got to do. Why? Because that's what people did when the pits looked like this before 2008. They could sit there. They had an advantage. Why? They had an advantage in the market because they could trade this market and they could see who was coming in and buying and selling. They could jump in ahead. They could jump in after someone came in and started executing big orders. And, you know, I've been around when it was there. It was exciting. And those guys made millions and millions of dollars, and they would make tons of trades on a day, every day. They'd scout the market. They would be in and out. They could read everything that was going on. In other words, they could read the volume because they were looking at the volume straight there in front of them. They knew when the Iceman entered the pit. They knew when Rich Dennis entered the pit and he started buying thousands of contracts of soybeans or corn or whatever it may be. Now, how do you do that today? That's been gone. What's happened? It's all disappeared. No, it hasn't. It's just in a different form. And you've got to equate this volume here, you've got to equate that to what people were standing in the pit doing this. This is the new pit. You've got to be able to understand this and to read it if you want to be successful in trading the market. Now, you've got reports that come out that you need to know. Commitment of Traders report, when they were released, what's going on there. What's the most important information that you need to know from these reports. Now, what's going on? You've got two sides of trading. Everybody knows that. You've got hedging and speculating in the market. That's what drives it. The speculators help the hedgers because they give them liquidity in the market. Now, a Commitment of Traders report, I don't know if you've ever looked at it, but one of the main things that you want to focus in on is managed money. What is managed money? Managed money is where you turn around, write a check to someone to trade for you, to manage the contracts. Hedge funds, they do that all of the time. The managed money, you've got computers that you're trading against. And you get these reports. This was a June 28th report, and this happens to be on soybeans. And I can look at it, all right? Managed money, where are they leaning? They're leaning toward the long side. How do I know that? They've got 176,956 contracts that they're long. They're short, the managed money is short 10,353 contracts. Now, when this report comes out this week, I expect this number to really be negative right here. You can see last week that they dumped 11,000, almost 12,000 contracts. The shorts only dumped 3,000. So the longs are beginning to get out. They're taking some profits. You've also got the users, the actual users. They're always, the shorts are always going to be big. Why? Because the market needs to hedge what they've got. This is going to be not a constant number, but this number is always going to be bigger than the managed money because the hedgers are in here. But we're interested in managed money and how they're leaning, because when the managed money begins to move, a lot of times the market will take a move to go along with it. How do I know that? Let's take a look at the live charts in here right now on November soybeans. And let's go on a daily chart and take a look at this, and it'll take just a second to get us there. The funds came in this year and started moving the market around in early March. There's ample supply of grains in the market. The soybeans, we had plenty of soybeans. South America harvest was going, beginning to start. We were getting that supply, and look what happened. They ran the soybeans from $9, a little bit below $9, up to $12. And where are we trading right now? We're trading at 10.36. And look at the move that we saw. This was the day I shorted the market, and I'll show you where I shorted the August soybeans. August soybeans, I shorted up here. I told you 11.65 and 11.63.5. The close on this day was 11.64. So I went over the weekend, even though I had a little bit of a profit, it was hardly nothing. And remember, my original risk was only 8 ticks or $100. And I still kept that same thing over the weekend. We came in after the 4th. This was 7.1. Then you come back in on 7.5. The low was 11.05. So a 60-cent drop to the max the first day, and that's why it looked the way that it looked, to where it jumped up to this profit that I am here. And this is a day-to-day running total here, right here. So today, right now, running total, you can see it's changing, 33.62. So where do we go from here? You've got to know when these reports come out. You need to know when managed money is beginning to move the markets. It's very important. As you take a look at these markets, that you see that the managed money can oftentimes give you a heads up in the directional move that you want to go. Just like here, I knew they were beginning to liquidate some funds. Why? Because we had the July contract that expiring. It was going to have to roll over, and they were going to have a lot of funds, a lot of contracts that they had to liquidate, and they did over a period of time. Now, seasons have changed. A lot of this is based on seasonalities. Seasonalities and historical trends. It happens in the equities. It happens in the E-mini S&P. It happens in the currency. Believe it or not, there's seasonal trends, and I can show you some things that will blow you away about seasonal trades and the historical probabilities of these trades as we go along, but I don't have time to show you all that today. Now, international markets have changed. People think, well, corn, soybeans, that's a dull market. Well, these markets have changed. The trends have changed because some of the markets in South America and also in Russia is growing as much wheat as we do. South America can produce as many soybeans as we do. Brazil, They can produce a lot of grains. China is, when that market is strong, they are net importers of grains. Those are things that you've got to watch as you go along. What's going on in the international market? Wheat exports. With the market the way that it is right now, wheat exports will be exploding. In the markets that we're dealing with, in the wheat market, wheat is being harvested right now, soft red winter wheat in the Chicago contract. And what I want to do, guys, is teach y'all how to trade these markets if you've never looked into them. I think the best market in the world to learn to trade in is corn. Why? Because I've traded a long time. It's more of a controlled type market, and you may wonder, well, how about these markets? Is there plenty of liquidity to go around in these markets? If I'm going to start learning to trade in the grains, is there liquidity that goes along? Well, let's take a look at it. Here's the E-mini Dow, 96,000 contracts today, the volume. Let me make sure, yeah, 96,000 contracts today. Take a look at the bonds, 206,000 contracts in the bonds. Take a look at December corn, 159,000 contracts. That's more, almost a third more than the E-mini Dow. Is there liquidity? Yeah, there's liquidity. November soybeans, 148,000. You take a look at the September corn, which is an old crop corn, 84,000, almost as much as the E-mini Dow. Put these together, and you've got more than the bonds also to go along with it. The wheat market is the least traded of these. You get the September wheat, it's traded 60,000 contracts today. You add these up off of the November soybeans and the August soybeans, and you've got 176,000 contracts right here that are trading. There is plenty of liquidity. So why aren't you trading it if there are markets to be traded? If you could come in here and make that type of money in the market and know that off of these you've got some pretty good probabilities that are popping up, and if you do it in a very controlled environment, that's what you're dealing with. Now, this is what I'm going to do, guys, and I would love to sit down and off of the webinar that I've got that will be August the 3rd and show you guys how to do this. Like I said, I've been doing this for 35 years, and we're at this point. I'm going to offer something that we haven't done before. I'm going to give all these power pack indicators that I use. The power pack gives you the power lines, which is, and let me show it to you. It would be the power lines, the power bars, and the power band off of this. We had this, and it cost quite a bit of money for it to develop these and have these. What do? They keep your rear end from getting blasted when you're entering the market at the wrong time. If you adhere to these and you know how to trade them, and I will show you guys how to trade these, how to use them to keep you from making big mistakes in the market. Now, this is a daily chart. If we went into let's say a minute chart right here, opportunities in here to trade. Here we traded outside the bands. This was at 11 o'clock today, and this is the soybean market. Let's take a look at the E-mini Dow. Same thing here, E-mini Dow. When you get in here and you get the opportunities, we saw a little bounce right here out of the Dow. You come back in and you wait for these opportunities, but you've got to know how to trade them and when to trade these to do that. And that's what I want to show you guys with the upcoming webinar that I will be doing in August. Why in August? Because I've got several more webinars that I will be doing, and we're going to have a lot of people in these markets. Thomas asked, don't you have to worry about the grain reports? No, you don't. And one of the reasons I usually make sure that I'm very protected around a grain report. You do have to make sure and trade through smart. Now, perfect example. If you were trading, Thomas, if you were trading the E-mini Dow or the E-mini S&P, and you knew that the Federal Open Market Committee, FOMC, was getting ready to announce a rate change, and it was high expectations that the rate was going to change, would you worry about that? Yes, you would not worry. You trade it in a way that would make sure that you're protected and make sure that if the market goes wild, that you aren't caught in the middle of it. Same thing in corn and soybeans, cattle, the bonds, all of that. When the UK was voting on to exit the European Union, everybody knew that was going up. The important thing is, and I showed you at the beginning, and I'll stress this again in the webinar when we go in the webinar, that you've got to make sure that you know when the reports come out. You don't give a rip what's really in the report. It's not going to make any difference for you. And the reason, because you don't know how people are going to trade the report, but you do know the reports are going to come out. You do know when key days, like the petroleum status. Do we really care what the petroleum status report was showing us? Not really. What we were concerned about and what we wanted to know was what time it came out. And when it came out today, we saw that crude oil dropped $1. You protect yourself when you go through these things to make sure that you don't get caught with your pants down and you get blasted because you were asleep at the wheel. You want to know, and you've got to have these times in here when you know that the reports are coming out and that you don't get caught with that. Now, on August the 3rd, what am I going to do? I'm going to have this 5 ways for gains in grains. It's $97. Guys, when I was doing institutional grain trading, we used to charge $80 on a round turn when I first started. And guys, if you can't afford $97, if you don't want to learn to trade the markets, and it's not just the grains, it's everything. I can show you some of the things that we've got that I think will improve you and lead you to hopefully making some really profitable decisions and getting ways to get on track for being a profitable professional trader. And it's like I say here, the road to becoming a professional trader is living a few years of your life like most people won't do, so that you can spend the rest of your life like most people can't. And that's real important. You know, my son has put in, he's a professional basketball player. He's put in a lot of work over the years. He's had a lot of opportunities to do things that and travel the world. He's been to China, he's been to Japan, he's been to Germany, he's been to Great Britain, all over there in the United Kingdom. He's been to Hawaii. Basketball providing him this, but he had to work at it. He put in a lot of work. Now he's got a cousin that is a little bit bigger than him that had all types of opportunities, all types of talent, but he wouldn't put in the work. And now he's reaping the benefit of it because he wants to play basketball, but he didn't put in the work when he needed to. My son's had the opportunity to do it, and I equate a lot of what I do and what I say to that same thing. Guys, you've got to put in the work. Don't think that it's going to be something just lost sound. How about, guys, are y'all there? Sound check, make sure here. Dan lost sound. I want to check with everybody else. Okay, everything's good. Now, you've got to put in the work. Now, when you put in the work, expect the reward. It's not going to be something, okay, I'm going to read this, or I'm going to get this indicator, and then I'm going to be the best trader in the world. It's not going to happen. I've been doing this for 35 years, guys, and I'll go through this 5 steps for gains and grains, and this is what you're going to get. You're going to get a blueprint for trading the commodities markets, the ag markets, and also the ES, the YM, the crude market. All of these, I'm going to sit down and we're going to put together a blueprint for showing you how to trade these things. 35 years of professional trading experience. And off of this, I'm going to show you how to avoid the pitfalls in the grain markets. Like Thomas said, well, don't you have to worry about the reports. I'm going to show you how to avoid some of these pitfalls that people think that's in the market. How to build confidence in trading not only the grains, but the ES and the YM. How to set up, if you're just starting in the market, this is what you need to do. You need to spend $97, and if you aren't satisfied with it, I'll refund your money. Along with this, you're going to get some of the short-term trade setups. I'm going to show you how to do it. You're going to get the power pack indicators that we've got. And also, we're going to sit down and I'm going to show you how to build a trading plan that you can put together right away. $97, and like I said, and we've done this with everything. How much margin does it take to trade the grains? If you've got the right account, if you day trade, if you're in and out in a single day, it's going to cost you, in most things like Infinity, it's $500. That you've got to have they'll allow that $500 for you to do that. Now, $97, guys, that is a steal. And what you need to do, let me get this, you need to go to tradethirsty.com/holiday. Okay? And if you don't like it, you've got our guarantee that we will refund your money off of it.